some of the stocks as well as the levels you want to keep on your radar. I want to quickly ask Shivangi, some of the buzzers on the Nifty. A Titan, Shivangi, is down. An NTPC is down. Energy as well as Titan and consumer durables as a basket have done very well for themselves. Consumer discretionary as well. But those two stocks being down, anything changes for you structurally? Is it buy on dips? Are these opportunities?
So looking at Titan on the monthly basis, it is still holding on to the support levels, and there is no problem in that. Of course, immediate basis, there was a bit of a pain point from the last two sessions with profit taking after the recent up move. But overall, Titan has been a portfolio stock, so no problem in that, and we should definitely consider any declines to accumulate this one. And talking about the energy space, of course, there is a lot of buzz and action here. We've seen that the most mover has been the Adani pack, of course, but NTPC has also done its bit. Of course, this will take a little time to again, start momentum. It has sort of fizzled out from the last six sessions. So NTPC is a little wait and watch over here. But Titan is definitely buy on dips.
Right, Titan definitely buy on dips. In terms of some of the other movers, the IT pack continues to be in focus. It's one of those, sectors which continues to remain extremely dull. Shivangi, anything at all looking good here within the IT pack for you?
So Harsh, IT has been a little difficult space to trust as of now. We've seen that any up move has only been converted into profit taking. Of course, there's one stock which is on my radar is Coforge, which is better off the lot, I feel. It is holding on to the immediate support levels, but again, momentum is slightly missing over here. This would or this could test a little bit of patience, but we could expect around about 1450 to 1480 odd levels for Coforge next.
Shivangi, just hold on for some more time. We need to take a short break. So when we come back, we will be looking at the last half an hour of trading and expiry volatility.
Welcome back. We're with Shivangi Sarda still with us. We also have Kunal Bothra. We have Devarsh Vakil of HDFC Securities joining us this afternoon. Devarsh, one quick question and curious to know, what's the view with regard to banks and this entire, FCNR, regulation which RBI has brought in and the reason likely for why PSU banks seem to be buzzing. You believe big from a deposit growth perspective for the banking sector as a whole and for PSU banks in particular versus private?
Sure. So, as you know, the NPC came out with the host of measures on Friday, and we have turned extremely constructive on banks post that. There are major two issues which were concerning our markets. One was obviously the higher inflation and because of the crude oil prices and the weak currency. The currency issue, because of all the measures which RBI and NPC took, I think we have decisively put a cap on our currency unless unthinkable like severe war starts and crude oil goes off the charts. We have, I think, made a top in currency. And what RBI did, we expect various FCNRB, ECB, NRI money to start flowing in over the next 3 months. That means the cost of capital will go down. The PSU banks in particular, because they have large holding in their treasury about the G-Secs, they are also tend to make some mark-to-market profits. That's why we are seeing particular interest in PSU banks from investors. But overall, I think banks will be able to capitalize on this opportunity and incrementally earn large amount of money into India, 30, 40, 50 basis points extra. And that also makes them attractive. As such, we our overweight on NBFC BFSI space. We think that that is the sector where valuations are quite reasonable compared to the past, and there are growth prospects ahead. If we look at 1 year, 2 year down the line, looking at the balance sheet, looking at the availability of capital and the increased need of working capital requirement, these banks will be able to lend and generate good profits. So we are we were quite positive, and we have turned even more positive post NPC.
Okay, Devarsh. Would you at all tilt towards the larger PSU banks if that is the way, if that's what you're really liking versus private, or would you tilt towards the large private sector banks? Is that what you're liking? Asset quality improvement in mid and small, would you play that theme at all?
Large PSU banks and mid and small private sector banks, that's where we feel that the alpha can be created. So that's where we are focusing. Smaller PSU banks are also good, but that is for a shorter term perspective. For 2 years perspective, will stick to large PSU banks and mid cap and small cap private banks. If somebody has a shorter horizon, I think next 3 to 6 months, maximum money can be made from small and small PSU banks, because they have usually the first to capitalize on these opportunities.
Okay. The other stock or sector which is buzzing, and Bharat Coking Coal, we spoke to the management there. It's in focus on the back of the West Asia crisis. We spoke with the management earlier to understand what measures they have taken for mitigation of financial stress arising out of an increase in diesel prices. Listening.
The difference between the diesel rate, this is the main issue. We have called all our major customers and we have made them understood that this is the nowadays this is the main issue with the effect of the West Asia diesel crisis or whatever you take. And we have made them understood that your rate will be preserved. Whatever agreemented rate initially 1 year, 2 year, 3 year, 5 years before, that will be the basic rate, and the difference, the hike of the rate due to this issue, we will provide them, we will compensate them. It is their choice. They will take either a difference with the retail shop, or they want to take with the West Asia price hike rate. Our dispatch target is 41 million tonne per on the year basis. And now we are also liquidated our stock from 8.40 million tonne to 6.60 million tonne, and further it will be liquidated, and our customer, rather every customer wants fresh coal. So we will produce and we will supply.
Devash, how do you look at the IT companies at this point in time? We're seeing some kind of corrections which are coming in for IT industry, and despite the fact that if you look at the broader macro numbers of Q4, the software exports have grown year on year there, but you still have this futuristic outlook issue, which is creating a lot of sell-off in this industry.
So we were quite underweight on IT companies earlier in our model portfolios. Our institutional research managed that, and we have gradually added, but now we are almost at an equal weight compared to the index. We are not see all these IT companies, as many of us have been pointing out, they'll have to change their business model from effort basis to now earlier time basis to effort basis, and that will take time. Smaller IT companies are nimble enough to change the business model and make their use of all the available businesses there, but that also will take time. The only caveat is that these companies have a lot of cash on the balance sheet, and we don't see much downside from these levels. So if somebody who were to were allocated, especially the institutional clients, if you are completely allocated, these are the prices at which we find it attractive to start allocating. But we don't expect high growth here, around single digit growth to maybe 15% kind of a growth is what we can expect from stock prices over a year. We don't. There are better opportunities for retail investors and for HNIs compared to large IT companies, and we will look for those opportunities, especially in NBFCs and BFSI space.
Be a bit of a dampener with regard to how the market looks at Eternal and Swiggy?
No, I don't think so. See, our institutional, as you mentioned, tracks them very closely, and they have recently turned quite bullish on the space. In fact, stocks like Eternal and Swiggy have been rated by by our analyst. The food delivery growth momentum continues there. If we were to talk about first Eternal, the growth momentum in food recovery and Blinkit's ability to balance the aggressive spend which they were earlier doing, now focusing on unit economics, and despite this intense competition, the commendable progress has been done. Our analysts have improved and upwardly revised the adjusted EBITDA estimates, and now based on our SOTP evaluation, Eternal should trade around 340. So there is significant upside for Eternal, according to our analyst. And same way, though, compared to Eternal, the Swiggy's basically the Instamart and Blinkit, the gap is becoming increasingly apparent, but we feel that the losses seems to have peaked there, and overall EBITDA adjustment has been revised upward. The food delivery KPI are showing consistent improvement, and that's why we have rated these two, Swiggy and Eternal, as a buy in our coverage.
So that's the rationale, and that's how it stacks up. Swiggy, Eternal on charts. Shivangi, give us your view.
Looking at Swiggy and Eternal, of course, we've seen that these stocks have kind of dampened a lot of lately, and these haven't really performed from the last 1.5 years. Of course, Swiggy has seen profit taking at any small decline, any small bounce. And talking about Eternal, this is a comparatively more stable stock than Swiggy, but overall, this has also been kind of little under pressure. So I would a little wait and watch here for these stocks. And out of the two, I think Eternal would be a better preferred pick.
Okay, Eternal, the better preferred pick. Just a couple of other movers in the day of trade today. Motilal Oswal, for example, is up 5%. What's the take there, Kunal?
Yeah, I think it's a good move for the stock, and it's come after a few days of consolidation/correction. Yesterday, in fact, the stock closed at 820 thereabouts, and it was actually a multi-week low for Motilal Oswal Financial Services. So now the stock is showing signs of more of a, almost like a reversal, a bullish engulfing pattern today formed on the candlestick front also for the stock. So this should augur very well for the stock in the near term, and maybe at least try to retest the previous swing highs, which has been a major resistance for the stock. That's closer to 900 mark for MOFSL.
The other one moving is PI Industries, and it's up 7%. Largest client pulling up its guidance for FY27 or calendar year 2026, however you look at it. Shivangi, what's the view on a PI Industries, 7% higher?
So looking at PI industry, of course, there's a lot of price volume surge here today. And but overall, if you look at the monthly chart, it has been trading in a downward sloping trend line from the last 10 months. So not sure of the momentum if it will continue. On the immediate basis, it needs to hold above 2875, which is the previous hurdle zone as well. If it manages to hold above these levels, then we could see a bottoming out structure. But again, too early to attempt for this one.
All right, Shivangi, thank you so much for joining us. I'm told we need to let you go. Thanks so much for giving us your time this afternoon. All right, moving on to an ET Now exclusive. Sources tell your channel that IT hardware industry, the industry as a whole, has raised concerns over the low level of finished goods production in the country and has reached out to the government for the same. Sumita here with all of the details.
That's right. Exclusive sources are telling ET Now that IT industry, particularly the IT hardware industry, has written a letter to government officials, key officials from the Department of Economic Affairs, MeitY, the Department of Commerce, amongst 6 other key government officials regarding the structural import dependence as far as the IT hardware sector is concerned. In fact, the letter categorically mentions that structural import dependence is going to cost the sector, and of course the sector includes IT hardware, which includes tablets, it also includes laptops, and of course servers. In fact, there are concerns that have been raised with regards to the low level of finished goods production in the country, and of course the letter states that it is going to be a challenge for the industry to attract component makers to India. This letter has been written by ICEA, top industry body, and in fact the letter also mentions how the current finished goods production is insufficient and it seeks structural incentive schemes and duty rationalization measures as far as the IT hardware sector is concerned. In fact, what we are also given to understand is that there was a meeting which was held, or one of the working groups that the Government of India has formed in the early part of June, where these concerns were raised by industry members to these key government officials. And in fact, the industry is also urged to address inverted duty structures on key inputs. It was also urged that products that require greater indigenization, they should be prioritized, and that FTA-led market access, that should be prioritized as well. And the deepening of ECMS scheme should also include the IT hardware sector as well. In fact, there were also recommendations that were given as far as the small appliances sector is concerned, because remember, even now, if you see India's small appliance exports to global south, they are only 0.31 billion, while China's are of that of $18.3 billion. In fact, as far as the small appliance sector is concerned, the industry once again has asked for greater indigenization. It's asked for structural support incentives, incentive schemes to sort of build up this sector, along with duty rationalization sector, and a push to MSMEs to fill the need gap is amongst the key recommendations by this industry body to the Government of India.
Okay, so thank you so much for that exclusive coming our way. Sumita career with that exclusive. Devarsh, you know, some of these hardware companies are on a tear. The likes of an HFCL, for example, being one, Sterlite Tech being the other one. What's the take on some of these names? May not be specific names, but would you at all show an interest in the segment sector, and how do you play it?
Yeah. So as you mentioned, we don't have specifically these companies under coverage, but as such, the all the ancillary companies which are in turn required for our services exports to grow. And in the beginning of the show, we mentioned that the India's IT services exports may not be necessarily from large IT company listed, but from GCCs and from other services exports are actually much higher. They are booming, and all these hardware and other components are required for our industry to grow. So the concerns raised by the industry is quite valid. And the way geopolitics are shaping up, it is also important that we do not just be dependent on our northern neighbor for continuation of these industries. So government should take a look, and I am sure there will be some PLI schemes in future which will support the production of food finished goods also, apart from the components.
Can you also give us a sense of some of the capital goods and power sector as well, especially power equipment makers, Hitachi, GVT&D, Siemens?
So we have been earlier quite bullish on them for last couple of years. Obviously, the valuation there has really gone much beyond our expectation. Many of them have already achieved their targets and are trading at a much higher valuation than what we expected. Um, there are certain power generation companies in the utility space. We still find some value. Our analysts have downgraded these stocks from buy to add rating, like capital goods. You mentioned stocks like ABB or others, which are earlier in our buy rating. Now, because the valuation has increased, they have been downgraded to add. But we continue to like this industry. The overall growth, as our GDP grows, we will require more energy. And as all of us know, the intensity of power required for these AI application is growing leaps and bounds. And these are the industries where there has been hardly any investment in the past, and there is need for investment in India, investment in US, and these companies can also benefit out of exporting to those developed markets. So that's why longer term picture is good. On a pullback, when the valuation becomes little more reasonable, at that time I would urge investors to look at this valuation. We should let it cool down a bit.
We spoke to the EPAC management earlier today, and EPAC secured 165 crore order book for PEB works, further strengthening its order book visibility. Sanjay Singhania, MD and CEO of EPAC in Technologies, underscores healthy demand across the infrastructure and industrial construction segments this quarter and expects total order book to surpass 1,350 crores. So, have a listen into what he had to say.
Our opening order book was around 1,120 odd crores to start with, and thereafter in the last 2 months we have booked substantial orders. I would say our current order book as on 1st of June would be more than 1,350 crores. So there has been an addition of 250 crores in spite of the fact that last 2 months we have already been dispatching material, and the further pipeline of orders and the deals which we have is pretty strong. And again, I think this month would also be a great month for us in terms of order booking.
Interesting. EPAC prefab is one of those prefab or prefabricated infrastructure plays. How do you look at this one, Kunal, on charts?
Actually, just looking at the charts for EPAC prefab, the stock I think hit to 14 to 15 mark, which is apparently a swing resistance for the stock in the very short term. So I think 3-4 days back there was a higher chunk of volumes which had happened for EPAC. The stock had moved towards 215 levels, consolidated for the next subsequent 3-4 days, and today again the stock is back towards a breakout, potentially about the 215 mark. So I think it's a trade which should be taken about 215 levels from a short-term perspective. Would look out for 225, 230, which could be a decent 7% on the short-term swing targets for the stock in the very near term.
Interarch, EPAC prefab, Devarsh, this entire space, do you believe that that probably growth may come through eventually, but could margins be the concern? Could pressure from a commodity cycle standpoint be a pressure point? Would any of those at all work against the sector as a whole in terms of the tailwind?
See, we don't have these stocks under direct coverage, but I think this industry is up for massive growth. The time required and the effort required to put up these structures using these new technologies is being implemented, used in many of the industries, and their usage is likely to increase. So right now these companies are new and quite small, but eventually I expect this industry to become a main portion of the infrastructure building, and a lot of large players will actually become from here. So we should keep these industries. There are 3-4 small companies which are listed. I think investors will do well to keep them on radar. These are opportunities which will play out over the next 2-3 years.
Okay, all right. So some of those names are likely to be in focus. I want to try and pull out any breakout counters that we can speak about, and Canara Bank is one of them. Some very strong moves there seen in Canara Bank. Let's pull up that counter. Kunal, what's the view you'd like on this one?
Yeah, I think even Canara Bank has been one of the few stocks which has today managed to break past above its 200 DMA. The 200 DMA for the stock was around 136.6. It's managed to cross by that by a margin of at least 1% today if it closes at the current juncture. So looking at this, and the back of higher volumes today, I would sense that this could be a good short-term swing rally for the PSU banking names. We discussed SBI sometime back that how the stock has crossed above its 200 moving average. Now, if you see at least 2-3 more stocks breaking past above their 200 DMAs, I think Bank of Baroda is also in line of breaking past above its long-term average if it's not already done it. So I think when you see 3-4 major PSU banking names providing that kind of a breakout, it's likely going to be a very strong indication that we are looking at a potential short-term trend reversal on the upside for many of the PSPs.
How best do you play it, Kunal?
Best way to do is to buy the larger cap heavyweight names SPI. But then when you see 3-4 major breakouts happening, it's not just about the 4%, 5% up move. Look at how much time these stocks have spent in the last 3-4 months, gone through a 20% odd correction for many of the PSU banking names. So even if there is a 50% mean reversion, there could be at least a 7 to 8% swing upside for many of the banking names.
And do you expect SBI to hold on to the 1000 level, given the fact that it's broken the 200 DMA?
See, the history for SBI, every time it crosses about the 200 DMA, there is at least a 5 to 7% swing rally. Now, then it depends on the entire ecosystem of the market. If the market improves, the data points improve, then it gets converted into a trend. And by that, I mean that there could be higher probability that the stock may break out of its lifetime high levels. But if the market remains what it is, like what we've seen the last 2-3 months, a few days up, few days down, then there could be a possibility that after this 5% up move, say closer to 1050 mark for SBI, the stock may fizzle out and come back towards the trading range.
Will that hold for other PSUs like PNB and Bank of Baroda as well?
Yeah, it should. It should happen in a very similar manner, because the reason why many of the PSU banking stocks underperformed in this last leg was because the likes of SBI suddenly came into a correction. Even if you look at the last 1 year of price analysis, SBI, the moment the stock had broken past about 820.25 in August 2025, that and the 20% up move for SBI post that gave a new wave of bull uptrend for the PSU banking names. The moment SBI corrected from 1100 mark to sub 1000 levels is where you've seen many of the other PSU banking stocks also going through a correction. So the impact, what I'm trying to say, the impact which SBI has on the Bank Nifty and of course on the PSU banking stocks is quite significant.
All right, we'll keep that in mind. Very quickly, Devarsh, your one top idea for this calendar year, for the rest of this calendar year?
So we were just discussing this bank. So you just discussed SBI. I was just looking at our target for SBI is around 1195, which is about 20% from 1000 odd levels, which is trading. And the way MPC has taken steps, way the opportunity is opening up, I think if somebody were, and we are quite bullish on BFSI space. So large cap SBI looks good for 20% gain over the year. Investors should accumulate that on every decline SBI for decent gains over the year.
Much for joining us, Kunal. Stick on. I'll quickly ask you a couple of follow-ons. It's obviously the weekly close, and therefore we might see some moves. We've already seen some of that, or at least on the Bank Nifty, 2% higher, 0.5% higher on the Nifty 50 index as well as a result. In terms of contributors, really, that's what you want to see today and look out for. Some big ones, pretty much all of them, the heavyweights, and within those banks, SBI and ICICI, contributing 50 plus positive points to the Nifty's rally today. So that's kind of the pocket which has helped. Even within the Nifty bank, though, you're seeing Bob, Can Bank, PNB, Fed Banks, and the smaller names, some of the PSU names taking center stage, and some sharp moves seen on some of those. And therefore, you've seen the move on the Nifty 50. The broader markets have also done very well for themselves. The small cap index closing very close to the day's high, 1.5% higher. The mid cap index also up 1.4%. If you look at the intraday charts on both of those, you'll see that they're closing at the day's highs, which is a clear positive when you're looking at the Nifty 500 index, some of the big losers are Tata Tech is down 4.5% in trade today. Acuitas, Schneider, Zydus Wellness, just some of the big losers there on the Nifty 500 index. Data patterns, on the other hand, 11% move. SEM India locked in upper circuit even now, 10% move. Jain Resource, Bellrise, LTTS, Gabriel India, and Kaplan Point, all of those stocks have done 7% plus in terms of the move today. PI Industries is well up nearly 7%, so that move looking strong. And there's Pine Labs, 6.75% of a move in trade today. Some very good moves there on some of those names. J&K Bank and the PSU Pack, of course, saw a decent rally. JSW Infra also saw a 6% rally in trade today. Broadly, it was a very decent mix. 400 advances to just about 100 declines. Really, Kunal, it's the tilt. It's the breadth of the market that stood out in trade today. But outside of that, what do you make of the move? You clearly said that probably the tide is shifting towards PSU banks and, of course, the Nifty. In terms of levels, what to expect?
I think more than levels, so there's one observation which I want to highlight,
Please.
Harsh. We saw 10% kind of a drop in the India VIX today, 9%, 10% drop in the India VIX. We are on the verge of breaking the 200 DMA on the downside for India VIX. Now, the correlation which India VIX has with respect to Nifty 50 is quite contrast. In the last 4-5 months, there have been 3 times when the India VIX has broken below and above the 200 DMAs. The Nifty is replicated in an exact same manner. Currently, the Nifty's 200 DMA is at 25,000. So if India VIX falls below the 200 DMA, which is 14 levels on the India VIX, it's likely going to have a very strong and a direct correlation in that sense with respect to Nifty. So which means that watching the India VIX over here is something which we've been highlighting in the last 2 days.
Yes.
That sub 17 mark is a breeding ground for positivity for India VIX and for the markets. Hopefully, if we fall below 14 mark, we close below that level, I think we could be in for a much more swifter and a quicker surprise rally for the indices.
So another 10% is what you want to mark out on the India VIX. And if that happens, Kunal expects this market to run away, go to 25K. Well, we'll wait and watch as to how that how that possible analysis pans out. That only time will tell. But completely timed out on this edition of Closing Trades. Kunal, thank you so much for joining us. We'll let you go, and viewers, we'll let you go as well for now. From Sajid, myself, everyone who puts this show together, thanks so much for watching. You want to stay tuned here, though. There's going to be Market Edge at 4. There's going to be live coverage continuing. So stay here. We'll continue to decode markets on the other side.